All right. Good morning, everybody. The the market really expanded yesterday on the hype. The CNBC interview with Nvidia, adding to that with Tesla and Apple doing its thing. That's three of the Mag 7 that should have shown some increase in CTA positioning, but we got nothing. We still have a very large positive dealer gamma increase. So we just keep on doing what we're doing. See, the S&P and NASDAQ are basically flat, along with the Russell. The Dow up just a little bit, not enough to count. Japan doing the best this morning, up more than 0.5%. They've got data coming out tonight, too. Powell's going to be talking today. I did a little looking around trying to find when he's done this speech before in the past. You know, he's not going to announce policy or anything like that. Worst that can happen is they get a little gotcha question on him. You know, other than that, he's going to do what he's really good at doing, which is chipping his teeth without ever really saying anything and just make it through the event. And it is an event. That's one thing to also note, right? It's like a forum or a luncheon or some sort of thing like that. We're going to get some numbers on the services PMI, and we've got Canada, European Central Bank, and I thought there was one other. Yeah, all these guys, other Fed speakers today, Bosick. So it's just going to be all day long. We're going to get these little shock waves through the system. What we're looking for is the dominant bias for the day. And we were talking about this yesterday, how these the indexes are mean reverting. And so most of the time you can play a reversal because that's what markets do, especially the indexes. But there's just some days where they don't, and they just keep going in one direction all day, all day, all day. It just keeps going. And of course, new traders try to take the other side, thinking it's going to turn back at some point, and it doesn't. It just keeps going and runs them over, and they fight the trend all day. So yesterday, it wasn't because of the economic calendar. That wouldn't have helped you. But you do want to take a look at what's out there on the day and try to gauge where the dominant bias is going to come from. It might be from any one of these. It could be another interview on CNBC for all we know, right? Never can tell when it's unprecedented or unknown like we had yesterday. But with a lot of these, we're not expecting much out of it, right? Bostic, that's just a waste of time. Bowman, same thing, that's a waste of time. You still have to be mindful of it, right? You can't dismiss it because you don't know if they're going to catch you with a gotcha moment, take him out of context. If he inadvertently says something he didn't mean to say, it's happened in the past, so we know it can happen again. We've got the 2-year auction today. And then in the overnight tonight, we're going to get the manufacturing PMI out of Japan. So just keep your eye on the clock. And it's going to be a quarter-hour event today, right? That 9:45 for PMI. That's another one that catches people by surprise because they're used to the half-hour and the new hour events, not these quarter-hour events. One of the questions that I get a lot from newer traders is, well, how are we supposed to anticipate what the news is going to be? Yeah, you don't, right? You don't try to figure out in advance if PMI is going to be bullish or bearish, or if the market's going to go up because of it or down because of it. At least I don't try, right? That's as good as flipping a coin. It's just recognizing that there's an event coming at that time and then being prepared to trade it afterwards. Very much like how I trade earnings. I don't try to guess which way earnings is going to move the market. I just wait for the earnings and then trade the outcome from earnings. It tends to suit me better, right? But you do you. The put wall was rolled up, but the call wall was not. Magic 8 ball. Yes, that's exactly right. I need to get one of those magic 8 balls. So with the call wall still sitting in place and the put wall rolling up, this reminds me of this uh, analysis concept that talks about structure and fighting levels of support or resistance. And when the put wall is 150, 200 points away, and we fall a long ways to get down to that spot, by the time we get there, markets are often exhausted and they're ready to be monetized, and they flip around at the put wall and run it back up again. But if you tuck the put wall right underneath the last lowest low, markets don't have far to fall before they can get to that put wall and jump the fence. Now, I don't know if that's going to happen, right? I don't have that magic 8 ball, but seeing the put wall roll up like this without the call wall also rolling up to get out of the way, it's exactly what it made me think of, is jumping the fence. So if we wanted to breach the put wall and expand considerably below that put wall, one of the things that I'd want to see is that it is brought closer to price. 55.58 is the put wall here. To even get to that point, we would have to cross below the 10 and the 20 and the 3. So if you look at 65.50, it's between the 20 and the 50 period daily moving averages. So we would have to break the 3, the 10, the 20, and then land somewhere in here. What it looks like to me is we get to the put wall, we overshoot the put wall, and then we find some structure on the 50 period daily moving average, which we have not done in a while, right? Even back here in August, we broke the 20, but we didn't make it to the 50. We haven't seen that 50 cross since the April lows when the president capitulated to the bond vigilantes and we rallied up through May. We haven't been back there since. There was a couple of analysts on Bloomberg in the last 24 hours that were calling for a 10 to 15% correction or pullback. They didn't call it a correction, they called it a pullback. 10 to 15%. They said, oh, it would just be a buy the dip opportunity. You know, we're not expecting anything radical, should recover within a week and a half. Kind of put that into context, right? What the, a 5% pullback. Well, let's just give it the 10. The 10% pullback would be to the 200 period daily moving average. That's 61.25. So, you know, they're talking about a pullback as deep as this November, December pullback. I mean, I'll take it, right? It would be nice to get a deeper pullback, kind of like what we were running in 2018 and 2019 when we were getting those 5 to 7% pullbacks once a quarter, or like every quarter and a half. And a 5 to 7% pullback reset everything and gave us another chance to, buy the dip. In the market that we've had, say, since April, we haven't really had those, quarterly pauses where we get a decent chance to reallocate funds. So we'll see. It's certainly on everybody's list. But so far, everything that we've got says don't short this thing. So you can keep adding money, to things that are overbought and expecting it to fall. And individually, stocks, there are trades to play. But on the indexes, we just keep going. Overnight volume was 56.5. It's within normal parameters. There's nothing that stands out there that says they're sitting out or that they got in heavy. It's just another night. But we wouldn't know unless we looked. We're basically flat on the morning, so we have no edge towards one side or the other, except to say that we can get to the lower edge without an inside day breakout. That's yesterday's high. And if we want to hit this ADR line, we would need to get an inside day breakout. We can hit this lower ADR without ever leaving yesterday's range. And I believe it lines up with yesterday's halfback. Not perfect, but pretty close. We overshoot the halfback, get the ADR, right? So if you bring that into just the intraday RTH, then the number adjusts a little bit higher, 6732 cog line. So at this point, there's no real edge for aiming to either one, other than to say, if we do break yesterday's high, that's the target. You got your 111 up here and your 1236, but that would be the ultimate goal for the day. To the downside, we don't have any expectation that it goes lower than the ADR itself, the first red line. But if we do overshoot that, then we want to aim for yesterday's low, which is the full ADR, this yellow line, 6692 cog line. And that would be about as much as we would expect. And going down to that level would not be bearish. I know, I get it. There's always some new person out there that says, but we went down 100 points. Wouldn't that be bearish? Well, it's 50 points. But no, look at this, right? It's just the wave, right? It's just what markets do. They got to go down. They got to go up. If it didn't have the pullback, it would just be a straight shot to the upside like a rocket ship, and it wouldn't allow anybody else to participate. So we need the pullback. We already got the higher high. Now we're looking for the higher low. If we break this low and then we break Friday's low, then we're putting in a lower low, and that's a completely different discussion. So getting to the lower ADR here, the first one, the ADR half, that is certainly not bearish. And getting to the second one would not be bearish by itself. Only going beyond that would we even begin to consider that we might be putting in a lower low, which could lead to a topping pattern or a rounding pattern. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. It's a wide channel, even wider than yesterday. A wide channel implies that even if we do get a breakout, it probably doesn't stick. Now, we said that yesterday, and it was a wide channel. Today's is certainly wider. Monday's was wider than Friday's. And yet, yesterday, we broke out, and it stuck, right? We just kept on going all day yesterday. So, you know, I will reiterate, that's a big word on an early morning. These channels don't make price do anything. They won't stop us from breaking out. They won't keep us broke out if we do get a breakout. They're just an analysis tool to help us try to define if a breakout was to occur, what's the most likely outcome? That it comes back in again, or that it holds the breakout and it continues to run. Without today's wider channel, just looking at yesterday's channel and comparing it with Friday, that looked pretty wide compared to what we had on Friday. But now, in the perspective of what we have today, yesterday's channel doesn't look so wide. We're still above the weekly pivot, and so far this does not seem to have gone too far, but I have yet to find a way to quantify how far is too far when it comes to these weekly pivot points. We have an MDP today. That's a missed daily pivot. We have not hit this pivot. Markets want to hit their pivot. They hit the pivot most of the time. So when it doesn't hit that pivot, it stands out a little bit. The problem is it doesn't count until tomorrow. The reason we say that is because at any point today, well, price could go down and hit that pivot, and then it wouldn't be a missed pivot. We would have hit it at some point today. So it's only going to count tomorrow. But for right now, we don't have that pivot. And that is the goal, at least until we break this high in the Globex and we break yesterday's high, and then I will give up on this floor pivot. So is 67.41. 41 is an old cog line. We don't use it anymore, but back in the day, 41 used to be one. It probably could be today if I spent 3 months validating the new cog lines, which I'm not going to do. And below that is 67.32 cog line, which is the floor pivot. So that is the base case for now, is that we break our own Globex low, get inside the channel, and get that floor pivot. That is off the table. I will give up on that idea if we set a new high in the Globex, and especially if we break above yesterday's high. I'll give up on that floor pivot. But until then, R1 is 67.72. So if we do get a breakout of yesterday's high, we've got the ADR up there. We also have R1 up there. 2 levels of resistance. If you look at yesterday, we cut through that line like it wasn't even there. And we didn't make it to R2. We wasn't able to go far enough to get there. So if we get the same kind of catalyst today, that's all it takes is headlines, and we've got plenty of events today that can generate those headlines. We can get the same fuel up or down, right? Don't think that it has to only go up. And for those who think that we had a big day yesterday and we can't have another one today, you're absolutely wrong. You can have big days back to back. Even unprecedented big days, you can have them back to back. So any idea that we can't expand another day even higher like yesterday because of yesterday, get that right out of your head. That's a mistake that you don't want to make. Now, if you look at the daily, I don't think we've had one recently. You can find what they call like railroad bars, right? And what it looks like is a really big day in either direction, doesn't matter. And then an opposing day going in the opposite direction, very much like this right here, where they're almost side to side, perfect, right? That you can have a real big day, and then the next day you can have a real big day going back in the other direction. and it pretty much just unwinds the first day's move. That is a lot more common than having a big up day and then another big up day, or a big down day and another big down day. But make no mistake, you can have multiple big days in the same direction, right? I'm leaning more towards the idea that if we do get another big day, that it is one of those railroad type patterns where we unwind the previous day's move. But if we break our own Globex high and we take out yesterday's high, well, then, play the 111, play the 1-2-3-6, and if that fails, jump on the train and run it to the upside. To the downside, 6711 cog line is S1. I know, right? We always talk about how they're using hyperbolic language and it's always like this, oh, it's unprecedented, it's so wow. But we've been having those kind of days where they're like, yep, set another record. Yep, set another record. I'm kind of tired of setting records, I'd happily go back to the market we had before COVID, when the ES would make, 12 points between 9 and 4:30, or it would make a 20-point day from 6 p.m. to 5 p.m. the next day. Back when we had an ADR of like 30 points. Sleepy, boring days. Nice and easy. All right, so looking at the current profile on the week, this is not quite a P-shaped profile because of this elevated structure. And then, we had what we had first put in before the launch on the ramp on the news, but it has built out really well. And as this develops through the week, I've kind of got this idea in mind that we're going to build out the entire value area here, that it won't stay tucked in right up across this high. If it does stay here in that P-shape scenario, then it's likely that we're going to go higher. That's 6750 that we're hanging out at, right? Remember, I've been telling you, we're playing 50s now, not hundreds. So hundreds are the speed bump to the next 50. If we break 6750 and start to let it go, then 6650 is the target, and 67 flat, that's just a place to pause. And that happens to be the low of the week too, right? But if we can get above 6750, then 68 is on the table as a new place to pause, a speed bump. Breaking 67 offers us a chance to get down to the previous week's point of control. And it's not dead on at the 50 because, well, markets are real, and all those want to be perfect, get it to the penny sort of concepts don't work. In the real world, you don't get things to the tick, to the penny, and you got to deal with what you get. So we're a little off. It's like they took a front run on the 50, but that would help slow price down as it got into the 50. And that's if we could even get through Monday's low, which is a pretty big if at this point. It would depend on the headline, right, and how bad it is. So this isn't quite a P shape, just to get back to that. And we are tightly wound up here. I mean, that's really nice. So we'll see what comes out of it, but that's the range. Mark that zone out, and then GTFO. Look to get out of the box. $10-day, 30-minute volume profile and TPO. This is an absolute mess. We have no pattern here. It's not a classic D shape. We don't have a double distribution shape of P or lowercase b. We got nothing, right? Just an absolute mess. We are still taking these candles off on the left for every new candle that we get to the right. So we're expecting this to tighten up through the week. And by the end of the week, we should have a much narrower profile unless we continue this expansion to the upside. If we did get this, then we would be looking at about 130 point wide spread as opposed to this, which is a 200 point spread. We are getting that elevated volume up here. If you remember, we've talked about the way it looks when you run out of buyers versus the way it looks when you have a bunch of sellers at those highs. This looks like we ran into some sellers, right? As opposed to just buyers that got exhausted. And we can see that better here on the intraday where we ran up and we had a lot of volume up here. Now that can be misleading because this could have been just exit volume on the run, because if it's running, you just keep piling in. Why not? As long as it continues to pay you, then keep adding into it. And eventually they got to unwind all that. So maybe that was just the unwind from this run. I'm skeptical though. I don't think that was just an unwind from this run. I think we ran into some sellers up here and that we're seeing more of them this morning. But it's controlled, right? There's no fear in this. You don't see them running for the exits and hitting below the bid. So we need to see how this resolves. But this morning feels very much like what we had last night. And we didn't even get a move in the kill zone. If you've read that book, Secrets of a Pivot Boss, and he talks about those narrow distribution IBs, this is a textbook perfect example of a narrow IB. And then, of course, you know what comes next. If you haven't read the book, well, man, go read the book. It's a really good book if you're a day trader. It's an old book, but there's a lot of value in old things. Even with that big push yesterday, we did not reach the edge of the weekly expected move. Don't say it. I can see you typing. We didn't hit the edge of the weekly expected move. We're still a long ways off. 68.11 cog line is the upper edge. Okay, I can agree with your agreement. We are still above the 10-week, more than 3.5%. We're not overextended on the weekly. We're elevated for sure, but my line in the sand to start getting a little nervous is 4%, and we're not there. So keep your eye on the 10-week, how far away we are from the 10-week. That really kind of says we should pause today, because if we don't and we break out and we run even higher today, I think we're going to reach that 4%. And then I'm going to get a little nervous. But it's not the idea that we would expect a sell-off, right? Because markets have two ways to correct. They can correct in time or they can correct in price. We get above that 4%, I begin to look for corrections. And that can just be a stall or a reversal, either one. It would just be, we're going to stop going up for a little bit because we went past the 4%. The problem is if I put my mouse at 4%, you can see that we've gone higher than that. We don't generally stay above it if we go higher than that, but we have gone higher than that. And we will again. So that's kind of the line in the sand that I'm keeping my eye on. The reversal generally happens very fast. So just keeping my mouse there, we can see here, for an example, it was a single day, popped up and then dropped back. Or here, a single day. But this one, where I just stopped, April 10, or August 10, it was a 3-day decline where we popped above 4. We actually made it to like 5.25. And then we dropped for multiple days in a row. And if we zoom in on that, it was that sell-off from August into September and then into the contract change. It doesn't have to be that way, right? It can just be a pause, but what we're looking for, right? So keep your eye on that 10-week and how far away we are. There was a post, right, by, I think it was Bank of America, it might have been Goldman Sachs, that was talking about how big the buyback blackout was going to be, and that by October 2nd, I can't remember the stat for October 2nd, but October 9, they had 2 dates and 2 stats. 75% of the S&P by October 9 would be in blackout period. Now, there are some exceptions to that. If they filed, they can still do the buybacks in the blackout if they filed for it. Otherwise, they'll be in blackout mode. And if we don't have the added exuberance of their buying, will we still see structure support the dip buying? I don't know. I don't think anybody else knows either. But that's the concern. China's down. Nat gas. China again. China again. The VIX is down. China again. And really, that's it. China's down. Seriously, like it's the only thing on the list. China. Now looking at what's up this morning. What's up? We got miners, Bitcoin. The thing about Bitcoin being up this morning is over a 5-day period, it was down more than 5%. And now it's getting a pop to the upside. Well, it kind of is due a pop to the upside after falling 5% in 5 days. So that's not bullish by itself. Gold is just out of control, right? There was more fuel on the gold fire yesterday. So over a 5-day period, GDX is now up more than 7.5% this morning, counting what we have today. The small cap space is lit still. We're seeing some of the ETFs that I use to monitor that is up. Uranium almost enough, 0.43. We need 0.5. So we're not quite there yet, but we're close. And then a lot of these other ones, they're up, but they're not up enough. Chips, the Mag 7, energy, quantum, bonds. So I like that they're in the right direction. We just need more of it. Banks, we need those. So I'm glad to see they're not down, but they're not up enough to give us any influence. And that's what we're looking for, right? What is going to move this market today? Because these markets don't move on their own. Something has to propel us, like yesterday. So we're always trying to answer that question, what's moving this market today? If you don't have an account at Spot Gamma or Trading Ticks or one of those options places, you can use the BXM. It's the buy right. Now, it's not going to be as good, right? Because it's free. You can just bring it up on your charts. Whereas if you're using something like Spot Gamma or Trading Ticks, which is not free, well, you paid for something that is giving you, above and beyond the norm. Invert the VIX so that it moves the same way that the S&P moves. Just use, multiply by -1, and that'll flip the VIX upside down. And then you'll have it moving in the same way that the S&P moves, the SPX. All of these should be moving in the same direction at the same time and have the same pattern in the same chart. When they don't, it stands out, right? So that's a nice little tell to see, well, which one is in control? Which one is influencing the markets? If it's treasuries and FX, then you'll see this US 30, JP 30 stand out. If it's the broader options market community, the BXM will do it. It won't do the 0-day stuff, right? Because this is not looking at 0-day stuff. But and it's not specific to the Mag 7, but it is a broad market outline of what's the options backdrop look like in all of the market versus just one tiny little piece of it. If it's volatility, it'll show up in the VIX. And so you can kind of try to check the box and say, well, which one of these is influencing the market? Is it volatility? Is it the options market? Is it bonds and treasuries or FX markets? And if it's none of those, go hit the news and figure out what equity market it is. Like yesterday, NVIDIA was doing this, and it wasn't any of these, right? It was one individual market. Well, throw Apple and Tesla in there. They started it, and then NVIDIA piled on after. All right, so KWeb is down this morning, which I would assume also means all of their constituents, BABA, Baidu, JD, PD, XPD, NEO. BABA is still trying to hold up inside of yesterday's range. Baidu, on the other hand, just completely jumped out the boat. It didn't wait. Airlines are also down this morning, but not down enough. Kind of keep your eye on them. I don't have my year-to-date anchor to VWAP on there. Not sure what happened to it. I don't think they're below the anchor to VWAP though. So if this move to the downside continues, the anchor to VWAP would be the target. Just need to put it back on there. It's still above the zero line though, so be careful with that. And we've got some divergence, right? We had these higher highs and higher lows, but the MACD is giving lower highs and equal lows. What a absolutely disgusting chart. Crude is up the most, and then gold behind that, miners and junior miners, and Bitcoin, and then generic energy. Solar behind that, and then silver, chips, bonds, but they're not up enough, right? You want to keep your eye on those. We don't want them to sell off. They don't necessarily need to rally more. We just don't want to see them turn red on the day. All right, so guys, look, it's a full calendar today. There's a lot of stuff going on, and I didn't catch it, but there could be something out of the White House. Yeah, there's also stuff coming out of the White House today. So, man, keep your eye on the clock. It's the best indicator you can use, and it's free. Right? No matter what device you're trading on, you've got the clock. So use that. Don't get run over by this nonstop barrage of data that we're going to be getting today. I heard yesterday too that there's now portfolio managers that are uh, recommending a new portfolio diversification instead of the old 60-40, that now it's a 60-20-20, and the 20-20 involves precious metals like gold. You know what that's going to do to asset allocations and more demand for gold? Like seriously, that gold ain't done yet. I didn't catch the name of what company did it. You know, was it like JP Morgan, Bank of America? I don't know. I'm gonna have to go look. But yeah, that's nuts. That's more demand, right? as if we didn't have enough demand on it yet. Everybody, be careful, be safe, have a good day. I will see you all tomorrow.